Hello everyone, it is the 31st of January 2017. It's 13:36 p.m. in London here in the United Kingdom. My name is Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money, and this is an emergency webinar, End of a Rising Market. And obviously we have a full room for that particular reason. Today I'm going to be with you for 60 minutes approximately. I'm joined by my colleague in Australia, Danny Eunis, author of a book that we'll come to shortly, because the strategy in that book, one of those strategies, is currently in play in the market right now, in the options markets for stocks. But today we're going to look at all markets. We're not just going to stick on one instrument. We'll look at Forex, we'll look at futures, we'll most certainly look at silver and gold, but we're going to focus in on the S&P futures contract, where the big move has really happened over the last few days, since the 25th of January, when we saw a principle in our software called the end of a rising market. And again, I don't hold these emergency webinars unless I see something that's of great importance. And so we hastily convened today's webinar based on several emails I've had, not just from fund managers, but from customers who saw that same principle and were using the scanners in the software, which indicated short trades on the small time frames. And today I'm going to show you how that looks, so you can make a judgment for yourself if trend alignment is important in your trading. I believe it's vital. Before we start, however, I do want to talk about risk, because we are a registered company here in the United Kingdom, where I'm broadcasting. As I say, I'm broadcasting live from the New Forest National Park, which is on the south coast of the United Kingdom, very close to a place called the Isle of Wight. It's a seaside port called Lymington, for those of you who know this area well. And Danny's out there in Australia. We'll be bringing him in shortly for his view, and to talk a little bit about one of the strategies, one of the important strategies that can be used next week and the week after, if we get what we call confirmation from the market that there is distribution happening. And I believe we're going to see that tomorrow and Thursday. So first of all, an important disclaimer for all of you. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss. It's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures or Forex. Therefore, you should not risk or invest money that you cannot afford to lose. TradeGuider Limited is an authorised representative of Forex Max Limited and is regulated here in the United Kingdom by the Financial Conduct Authority number 229906. Now, for those of you who don't know me, I'm the author of two books: Trading in the Shadow of the Smart Money, which is all about market manipulation and how to follow it on the price chart, and then the Volume Spread Analysis System Explained, which I'm going to talk a little bit about today in more detail. So these are my two books. That is me, and I'm also now the head trader for the Wyckoff Williams investment portfolio based in the United Kingdom, and we will be officially launching that fund towards the end of the year. And at the moment we specialise in futures and stocks as our main instruments, but we are looking very closely at the commodities futures market, and I'm going to talk specifically today about gold and silver, where there's been a lot of opportunity over the last 2 weeks, and there's more to come, especially if you trade the ETF of gold and silver. If you don't want to get involved with high leverage and great risk, then ETFs are a very good way to trade, which is basically trading options on futures of the commodities. And of course, gold and silver have really been in the spotlight in the last few years, because they've been heavily manipulated by two large banks. But that's my background. I don't come from a financial background at all. I'm an ex-police officer. That was me. That's the Hampshire Constabulary badge there. I was based in Southampton in the United Kingdom, also in London, Metropolitan Police, and obviously with a surname like Holmes, H-O-L-M-E-S, always got a laugh when Detective Holmes would give evidence, and there was never a Watson to back me up. That's the story of that. But I left the police in my early 20s, started my own business, and ended up in this business, which is, of course, the business I love, trading and investing and teaching people how the markets really work. And I'm very lucky that I was blessed to have met Tom Williams, who's the inventor of the strategy we're going to show you today, or one of the strategies, which is called volume spread analysis. So VSA, we call it for short. And Tom passed away November the 7th of last year. That's Tom there. He was 87, had a great life, and managed to travel the world with me, teaching people the truth about the markets and teaching people how to avoid the traps that are commonly set by what we call the smart money to ensure that you lose money in the market, which is why many retail traders and investors struggle. But I'm going to be doing a course, which I'm going to invite everybody to. It's either going to be this Saturday or next Saturday. I haven't worked out which date yet. It's completely free of charge to everybody. There's no cost. It's a 3-part course lasting 90 minutes each session. And it's called How to Make It in the Markets with Wyckoff and VSA. And it's going to have 10 strategies in there, which we have proven that work. And we're going to teach you those. But more importantly, we're going to teach you about trading plans. We're going to teach you about belief systems. We're going to teach you about mental preparation. We're going to teach you 5 of the key principles to short and 5 of the key principles to go long. And we're going to show you how to find them as they happen, not afterwards, but as they happen, and get an email alert when that signal or indicator has appeared. Now, in October of last year, I was very honoured and pleased. It was the last actual webinar that I did with the master, Tom Williams. And Tom and I presented live. Tom was obviously over the internet. I was there in person at the Chicago Mercantile Exchange, the CME Group, the biggest exchange in the world, trading live with volume spread analysis and the Wyckoff method. I'm very proud of that moment because there's very few traders, in fact hardly any, who've been able to trade live in the exchange using software as the market unfolds in front of the trader. And we had several trades that we identified. One of them, my favourite signal, a test in a rising market on the Aussie dollar. And funny enough, that very same signal appeared on Thursday of last week as I was in a live trading seminar that we did with a large group of people, and it works very consistently. Anyway, today is all about the end of a rising market. Now, for those of you that don't understand what VSA is, I'm not going to play all these different things to you, right? I'm going to go straight to a schematic here. I'm just going to get through this particular PowerPoint slide, just so you know, is already on YouTube. So I'm not going to dwell on it now. If you want to go to the YouTube channel afterwards and look at this presentation, it's on there, and I'll give you the link to go and see it. But what we're going to focus on today, because we've got limited time, is actual charts. But if you want to find out more about what we do and what this is, there is a website which is very detailed called volumespreadanalysis.com. Okay, and this is the site which has got everything you need to know. So if you want to do some follow-up homework, if you like, after I finished here, that's a very good site to go to give you the background of what I'm going to talk to you about today. But very simply, we're going to talk about chart reading, how to read a chart just like a professional trader would. And that's exactly what we are. We're professional traders. We make our living trading. Danny, myself, the team here are full-time guys. But we also teach, and we believe strongly that even though we run our own fund and we actually trade money ourselves, we get a great deal of satisfaction about helping other people, and that comes back to us 10 times. It's a karmic law which we believe in, which is the reason we do these free webinars. Sometimes we do 1 a month, sometimes 2 or 3 a month, it depends. Because we know once you see the truth and you hear the truth, you will understand that the markets are rigged, the markets are manipulated, but once you can read a price chart, you can put the odds in your favour. So let's start with a chart, and we're going to start with a chart of the E-mini S&P, and we're going to start with the 4-hour chart. Now, first of all, can everyone see here the 4-hour chart of the S&P? I'm going to move back to the 25th of January and talk you through that line that I've got. But can everyone see before I move forward? Okay. Can everyone see this? Okay, good. All right, so everyone said yes. So, first and foremost, there's a number of things that have to be in place before we see the end of a rising market appear. Number one, we need to have bullishness in the market. It means there has to be bullish sentiment in the market, meaning it's going up. End of a rising market signals don't appear when the market's falling. They appear when the market's rising. Now, a lot of traders make the mistake, a very common mistake, of using mathematical formulas in attempt to predict the future of price. But you'll see why so many lose money with that method, which is the method that most traders teach, by the way. What we teach you could be considered controversial. Certainly it's contrarian, but it is the truth, I'm afraid, as you're about to see. See, this is a 4-hour chart, so each price bar takes 4 hours to complete. If you're using a MACD or a stochastic or a moving average here, and you'd brought into the market here, you may well have made some money as it's going up. And because you make money as it's going up, you think, well, I'll tell you what, it's going up, I'm going to add to my position. And many traders do this. They start to add into their move as it's moving higher. And often they'll see very high volume coming in on these upward moves. And you can see when we talk about volume spread analysis, we're talking about the volume, which is simply the activity on the price bar. We're talking about the range or the spread of the bar, which is the high and the low of the price bar, okay, which we call the spread. So for instance, here we had a wide spread. There's the low, there's the high, and we closed just off the top of the bar. Okay, so volume spread analysis. But we never use the opening price in our analysis because nothing's happened yet. We only use the closing price, which is that little tick that you see there, that little line is where the market closed or the price closed on that time frame. So here we can see we have a widespread bar and we have what we call ultra high volume or excessive volume. Now, how do we know this? Again, built into the TradeGuider toolset, the proprietary software that's available for TradeStation, MT4, NinjaTrader, Sierra charts, Infinity charts, which is in fact Sierra charts, which I'm using here for this demonstration. This shows us that these two bars are in this salmon colored area, right? This is all proprietary and it's an average volume histogram. And both of these bars are touching the salmon area, which means that volume is excessively high on these moves. Now, let me ask you all a question, right? Let's just make the observation. What do you notice about the high and the low of this bar compared to the high and the low of the bar behind it? What do you notice? What's happening to it? Just type it in. Just type it in so I can see what you're thinking. What do you notice about the spread, which is the high and the low of the bar, compared to the high and the low of the spread on the bar behind it? What do you notice? Yeah. Yeah, it's half the, well, many of you said it's half the range, which is a good observation. Also, we're closing near the middle of the bar here on the narrow spread. So there's the top of the bar. We're closing just near the middle here. And we've got what we call on this high volume, David Weiss, who's an excellent trader and an expert in the Wyckoff method, calls this shortening of the thrust. Shortening of the thrust. If you imagine the effort to move prices in the volume, we've got massive effort, but a shortening of the thrust in this bar. And this is known, because it's very, very powerful, as the end of a rising market or end of rising market. Now, this is a VSA indicator. It's built into the software, but it's only a part of what we do. The indicators. You'll see there's lots of red and lots of green indicators. We're often asked, okay, Gavin, I'm looking at this chart. You've got green, you've got red. Do I just buy on green and sell on red? Actually, had you done that on the confirmed indicators, you would have actually made money. And the confirmed indicators are the ones that are solid red. The ones that are not confirmed indicators are coloured light red. So you pay a lot more attention to the solid red ones than you do to the lighter coloured red ones. And when I talk about confirmation, volume spread analysis does not analyse just one price bar. It analyses 2 or sometimes 3 bars. We don't make that public very often, but that's why we have confirmation bars. Now, let's read what the master, Tom Williams, and Philip Friston, a fund manager that helped Tom for many years, talks about in the indicator information box. This is not a sell signal. you'll look at it afterwards and say, Gavin, that's a sell signal. In fact, if Tom was sitting next to me now, God rest his soul, he'd be saying, Gav, that's a sell signal. Shut up, tell them it's a sell signal. But I never do that. I always refer to it as an indicator. But it is one of those indicators in our software which has the highest probability of turning price to the downside. But again, you're never going to hear me say that's a sell signal, because I hate anyone who gives me a piece of software that says, Gavin, all you got to do is go green, buy, red, sell. You've been millionaire in a year, mate. And I've been to seminars that do that. I was in one 2 months ago in London. I went to see it. 4-hour presentation, $20,000 piece of software. And the bloke at the front just said, listen, you've got to do nothing. Then just press the button, my friends, and you'll all make money. Do you know how many people bought that software? 35 that I counted as I left. Mugs, gullible mugs. And we've already seen people who do this. And there was stories in America of, when I first moved there, of companies going out teaching people how easy the markets were to make money in. That's a load of nonsense, guys. It's rubbish. Right? It's not. If it was easy, everyone would make money in the markets. But they say that 90% of the retail traders don't do it. They consistently lose. I can assure you that if you learn to read price charts and you become contrarian, i.e. you become the wolf and not the sheep, you can make it in the markets. And I'll prove it to you, because in my course, I'm going to prove it. And if you want proof, 100% proof, listen to Danny when he comes on from Australia, who was not employed by TradeGuider through advertising, who was not employed by TradeGuider through, we were desperate to find someone. No, he's a customer who came in a few years ago, brought the software, brought the mentorship course, brought my book, brought Tom's book, managed to contact Tom Williams, and we've spoken with Tom, and I spoke with Danny, came on all the mentorship courses that we did, spent thousands and thousands of dollars, and became a full-time trader and became an expert in options. So with respect to Danny, anyone can do this, and to me too, I'm an ex-policeman, anyone can do this. But you have to understand what a chart is telling you. Now look here, the market's been going up. It says the bar should be a narrow spread up bar. Let me clarify what that is. A narrow spread, which it is, and an up bar. Let me define an up bar, right, as defined by volume spread analysis. An up bar is a price bar that is simply closed, okay, higher than the close of the previous bar. That's it. That's an up bar. And a down bar is a price bar that has closed, not the high and the low, the close has closed lower than the close of the previous bar. You even might want to write that down, because for some reason that seems to confuse people. We make it very clear in every webinar. Nevertheless, you still get people saying, well, I'm not sure what an up bar and a down bar is, so I'm going to repeat it. And you write it down and stick it on the wall if you need to. An up bar is a price bar that has closed higher than the close of the previous bar, right? A down bar is a price bar that has closed lower than the close of the previous bar. Like here, there's the close, there's the close. It has closed lower than the close of that previous bar. Hence, we have up bars and down bars, okay? And closing off the highs, what do we mean by closing off the highs? Okay, it's closed off the top of the bar. That's the high of the bar, it's off the high, which means it's not closed on the top, it's closed really near the 70% or 60% level of the bar. So it's closed off the highs and into fresh new high ground. See, it's all cryptical, isn't it? Fresh new high ground. It should just say there's no price action into the immediate left going back 500 or 600 bars. You can even go less. This is a 4-hour chart. I can see from the 21st of December there is no price action to the left of this, and now we're coming up a month later and we've broken out of these old tops, so we're into fresh high ground. There should be no old trading ranges at all near this level. Well, I usually use a month's worth of data on a 4-hour chart. There is no price action at or near this level. Reading this will make the biggest difference to your trading that anything can do, because it's Tom Williams with his wealth, 45 years of experience, and Philip Friston, 30 odd years of experience, talking to you and making sense of what's going on. We know that there has been buying by the high volume. If the market makers were bullish, they would have marked prices up on this buying. For the spread to be narrow, they must have been willing to supply the market without marking the prices up. This type of action is bearish. This is only valid if you've had already seen a substantial up move. Here to here is a move from 2225 in the S&P all the way up to 2293. That is a substantial move. Okay, so we've qualified all of this. The bar descriptions qualified, the backgrounds qualified. After a period of rising prices, you are vulnerable to one or more professional groups taking profits. Well, how do you take a profit? You buy down here and you sell it to the herd at the top on the basis that Trump bull rally is going to continue, which is what we heard last week. Some people were touting that the S&P would be at 3,000. Some people were saying that the NASDAQ was going to go. I mean, all of this is complete rubbish when you see signals like this. So after a period of rising prices, you are vulnerable to one or more professional groups taking profits. Also, as markets rise, a point will be reached when those traders who have missed out on the top, right, on the move, will rush in to buy before losing out on this fantastic bull run. It's exactly what happened in America. A lot of people started to buy at this top. Even traders that are already long will add to their positions. They can all be sucked into a bull market at the top. The news will be good. Want to see the news last week about Donald Trump's first week of presidency? It was, hey, he's going to be good for business. Hey, the S&P is going to rally. Hey, everything's good. Guess how many people started to buy last week? The herd. That's what happens. It has to make it that way. And I'm going to show you why I knew that had to be, at least temporarily, we don't know for certain yet, a marking or a top in this market. Because, you see, if that's all buying volume in the market, right, I'll show you why the next bar is a big clue as to what's happening here. Okay, so future. Prices should now decline. Any up move back into the area of supply on low volume with narrow spreads or up thrusts is a further sign of weakness. Remember that. Okay, because that's what we call confirmation. Okay, be cautious if you now see a down bar with a narrow spread with volume lower than the two previous bar. This could be lack of selling pressure. Okay, because sometimes on these big bars you get what we call a test and it goes up one more leg. Okay, also if you see down bars on high volume closing off the lows with the next bar up, this shows potential strength. We'll need to see testing of that. But remember, this weakness will not suddenly disappear. When not appearing in genuinely new high ground, this can represent absorption volume. Now, this is into fresh high ground. This isn't absorption. Now, I'm going to move the price, right, so the next 4-hour bar, okay? Okay, now, what do you notice about the closing price of this bar? Is it higher or lower than the close of the previous bar? It's a down bar. So if that buying was all buying and the market maker's bullish, the next bar wouldn't close lower. So some sort of distribution has taken place. Now, the question is, when will it show itself in the market? Notice I mark the low of this bar and just below the close of the first high volume bar, which tells me supply or sellers are entering the market. So I've marked that out. And I'm projecting that out after I saw that signal. Now let's follow what happens. Next bar goes up. Very little volume on that up move. Narrow spread, but we close in the middle. The next bar, we close level with the previous bar on an increase in volume. Still not much there, but that's an up thrust. I know it's an up thrust because it looks like one. It's got an increase in volume, as we can see, and it's closed level with the previous bar. That's why the color of the bar is black. Again, in the TradeGuider software toolset, a black bar means it closes level. The next bar then closes on an increase in volume. So you've had more volume on this last bar near the low of the bar into the area where we have the end of a rising market signal. But still, I wouldn't short it here, and I didn't, because we've got these green diamonds still. Now we start to see some interesting activity. We have another down bar, and we have over here, let's just move that up here, stopping volume. So professional money here Where the end of a rising market are saying, okay, let's come down and see if we can support the market temporarily. We may be able to unload some more of our holdings up at this level. And then we move forward, and sure enough, we have an up bar because there is stopping volume there. Then they test that level. And then they test it again. 2 green signals on low volume. So now, if this is a bull market, those tests should cause a big rally up to the round number. Okay, if we're going to see big move. And sure enough, we get that rally, but it's got a red signal on it. And this time, this is confirmed. Oh, this is what happens, sorry. We have an upthrust. So this is exactly where I'll expect to see the upthrust, is after we've seen an end of a rising market. Themistocles is saying, I believe there's also another explanation for the end of a rising market. If the crowd, the least informed participants, keep on buying on tops, there is simply no more fuel for the rally. Who has remained to keep on buying, then we have no demand bars. Yeah, well, you're going to see that for yourself. You've just read my, well, you don't even need to read my mind. That's exactly what we saw. So again here, we go up, very light volume. That is no demand. There's no interest in higher prices right there. Now we have a collapse through previous support on very high volume. So now we're starting to form this mushroom, which I talk about. If you haven't read my book and you haven't read Danny's book, it talks about where a market forms this top. It's called the mushroom, the magic mushroom. Not to be confused with the magic mushroom that makes you very spaced out. This is a very good way to make money. And basically what we see here is we see distribution. So now we've got a widespread down bar closing near the low, potential gotcha bar. Now gotcha bar does exactly what it says on the tin, right? It locks people who've gone long. They go, well, how did that fall? Hold on a minute. I just saw on CNN, they said it was going to go up. I just saw on MSNBC, the market's going to go up. The analyst from Goldman Sachs told me it's going to go up. Oh dear. There's a rude awakening. Right? Suddenly we gap down. Oh dear. End of a rising market. Could that possibly be true? Could that signal that Gavin talks about in every webinar and says it's a serious sign of weakness actually really be a serious sign of weakness? Well, we go up here. Themistocles, there's your no demand bar. Look at the volume. Well, why is there no demand? There's no interest there. Very simply, because they've got rid of their holdings here. Look at the volume. End of a rising market, gap down, gotcha bar. It's all in my book, right? But you're seeing it actually happen a few days ago. Then we have another little up thrust, a secondary negative bar. Goodbye. Oh, hold on, I'm still long. What just happened? You just got your backside handed to you on a plate. And it happens all the time. Now, why is Danny's option strategy so good for these principles? Because as soon as you see it, if you trust it, you're taking put options. Put options mean you can say, well, look, you know something? I think the market's weak up here. The whole group are going long. Okay? Everyone's going long. Danny will tell you this in a second. And his option strategy is beautiful because it says, do you know something? I can see everyone's buying stocks up here. I'm going to short them. But I'm going to do it in such a way that I've got what we call an option strategy, which we'll get Danny to talk about. And then, lo and behold, if we move forward and what actually happens here, right, we get some buying coming in, some support. Look at the volume on this down move, right? So they do support the market here. Then they test it. Then it comes back down. It whipsaws, right? And now we're coming down to a very interesting area right now where we're actually coming down and testing this bar here. Now that is the highest volume since we saw this bar here where the second high volume is. That's so if you look at here and here, so this bar becomes important. It's called a trigger number, and let me show you why. If we now put in a horizontal line and we mark the top of that bar, we mark the close of that bar, and we mark the bottom of that bar. All of those are important now. Why? Because the activity here by professionals was massive. It was actually buying that came in down there. Everyone's asking me, how do we get Danny's strategies? Don't worry, I'll tell you in a minute. Let's just stick with the thought process, please, and then I'll come to it because it's important. So we can see there's no green signal on this bar, but there was on the 60-minute chart. Okay, so that was green on the 60-minute. Down here, they mark it back down on high volume into the same area. We do have a signal down here. Let me just get rid of that line. I don't need that one. Let's go over to here. Stopping volume. Okay, similar to what we had here. They stop the market, they test the market, rally. Okay, so that definitely was genuine stopping volume, because there are two rules you must never forget if you want to make it in these markets. Rule number one, when strength appears, it appears on down bars. As the price falls to lower prices, it becomes attractive to professional money who want to buy at lower prices. So you get buying into down bars. Look at this narrow spread, very high volume, climactic bar. The market gaps up, that's what caused the rally. Okay, here and here you see this massive volume, so that's strength appearing on down bars. The total opposite, weakness, when it appears on up bars, especially on massive volume. Massive volume. Now the only thing I haven't seen yet to confirm all this is a no demand bar into this area. So I expect the market to rally temporarily, possibly tomorrow, because tomorrow we have the federal announcement. So I expect it to actually start to rally. Now, when it gets to this level here, there's another price level that's extremely important now to keep an eye on, and it's at the top of this bar. Right? So I've got now this chart. I'm going to leave this chart for my training session that I'm going to do. It's framed out with key areas for the market to go through, and I won't do anything till the market gets there. If the market falls through here and then goes back up on very low volume to this area, with this in the background and the trend being negative, red, 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 I'm going to short it. I'm going to short it for a simple reason that we're in a downtrend. Why is the top of this bar so important, right? Why is that whole price bar important? Because of the volume. This is Yao Ming volume. It's massive. That's important. That's important. But it's only important when price action gets there. It's totally irrelevant down here because price action isn't here. We're only interested in ultra high volume bars. This is what we call an inside bar. Price action is inside the massive volume bar. So three things are important on that price bar for any analyst that understands Wyckoff and VSA. The top of the bar, the bottom of the bar, and the closing price. Indeed, we can move that down to the bottom right there. Okay, and all of these bars make sense when the market moves through them. Once they get through these levels, if they go back up and bump the bottom of that bar on very low volume up bars, it means there's no interest. That's why they're important, Jerry. Yes, I'll talk about silver in a second, but let's bring in Danny, because one of the interesting things I want to talk about is this is based on the S&P 500 futures contract, right, which I like to trade. But I also am using TradeStation for stocks, and I'm using strong and weak stocks in TradeStation to find stocks that are acting weaker or stronger than the index. Now, here I've got weak stocks, right? And what you're going to notice about the weak stocks, this is just a simple 5-minute chart, is as the index falls, these fall quicker. So from an options point of view, you can be in the strike zone very quickly when you're shorting using options because of panic. Because when a market begins to fall rapidly, especially after people have bought it at the top, they poop themselves. I mean, Wyckoff called it puking out. That was what he called it. They puke out their stocks. They've bought at the top. They see the market collapse. They don't understand why, because everything's bullish. And then eventually they panic. But if you're short using an option strategy, you can be in the money very, very quickly. So Danny, let me bring you in. Are you there? Danny, are you with us? Can't hear you. He may have gone to sleep. He may be... Well, I don't know. Can any of you hear Danny? Danny, you still there? Maybe your internet's gone. I know it went last time, which is a great shame. Yeah, it looks like his internet's down. That's a shame. I think smart money are messing around with him. Yeah, well, Danny, if you come back, let me know. I'll just introduce Danny to you, though. This is details of his book. It's, well, again, you'll see the details on the webpage. Okay, it's called Supercharge Your Trading and Investment Account Using Wyckoff Volume Spread Analysis. And it's all about how to use option strategies with volume. And that applies, by the way, for not just stocks. It's for metals. You know, you can look at certain futures contracts that have ETFs for options. And it says here, Danny Eunis has been an options trader for the last 6 years. He's traveled the world teaching retail traders and investors how to invest safely in the financial markets using low-risk option strategies that governments allow to be invested in retirement accounts. With all his experience as a chartist, there was still one piece of the puzzle that was missing. The missing piece will allow Danny to decipher when professional traders are starting to be active in the markets. And that, of course, happens when ultra-high volume appears. Danny was fortunate to cross paths with the late Tom Williams, former syndicate trader, and Gavin Holmes, CEO of TradeGuider LLC, Systems LLC, and it was through their teachings that Danny could determine when professional traders were entering the market so that he can trade in harmony with them. Tom Williams wrote The Undeclared Secrets That Drive the Stock Market and Master the Markets, which has been read by more than 100,000 traders and investors around the globe. Gavin Holmes is the author of Trading in the Shadow of the Smart Money. In the books, Tom Williams and Gavin Holmes explain how the financial markets are manipulated and how the retail trader can identify this and take advantage of it through volume spread analysis, trademark, VSA. Danny continues his education with an option strategy that is over 40 years old, which it is, but is one of the, okay, his mic's gone, he's just told me that, no worries, but is one of the most powerful investment strategies in the market. Now, the book itself, you can find here, it says this is one of the finest books on the Wyckoff VSA trading method currently available. I won't read it all to you because we got a chance to look at and we got limited time. But I highly recommend this book. It's, I mean, again, it's taken Danny a long time, years to get to where he'd completed it. I've written a forward to the book. I'm using 2 of those strategies in the book now, and there'll be another 4 that I'll be using for the fund. I believe in it. I know it works. I've proven to myself that the book itself is full of good knowledge. Yes, not only did I read it, but we gave it to about 10 very long-standing customers of TradeGuider to proofread, and the feedback was absolutely incredible. So if you're in the room and you helped Danny with the feedback, thank you very much indeed. We very much appreciate that. The book's available now as a PDF to download. It's $49.95. And I can assure you it'll be the best investment you've made if you really are serious about getting knowledge to take your trading to the next level. It's a very small commitment to make. I've printed the book out. It's got lots of charts in it, and it's going to really reconfirm a lot of the things that we teach, but it's going to give you new strategies that have never been taught before in the realm of TradeGuider. And now, talking of which, let's go and show you now how we find stocks to short using Wyckoff VSA. And again, this is all in Danny's book, so I'm not going to take much. I'm not going to discuss it in a lot of detail. I'm just going to show you how I did it. Now, you should all be able to see, and I'm going to swap screens here for a second. So I'm going to just move my screen here so I can see your questions. And let me ask you all a question. Question 1, did you all get the link there to the web page that I've just put up? Julius says, how important is a 4-hour sign of weakness 5 for those of us? Right, Julius, I'm just about to show you how important it is. 4 hours, my favorite time frame for swing trading and investing. I use the weekly, the daily, and the 4-hour as my main time frames. But the 4-hour is if you're an investor, if you look, I mean, even the 1 hour is a good one, because if you see distribution happening, it's going to start on the 1 hour. And then it's going to move through to the bigger time frame. A few people said they couldn't see the link, right? I'm going to put it in again. I'm going to ask you again, right? I'm going to put it into the room now, right? So, and again, I'm going to ask the audience, can you see in the chat area now the link? I've put it in there. Everyone said they can see it now, right? You just click that link. It'll take you through to the web page. It's got all the information on the book in there. Need to say no more about it. Now, can you all see, second question, my screen of the end of day charts using Metastock end of day data for stocks? Can you all see this? Hello, Saeed. Just see you there. I hope you're feeling better, mate. Got your email. No problems. All dealt with. And we'll catch up with you whenever you're feeling better to sort out and settle up with you, Saeed. So hope you're feeling better, mate. Meant to send you an email. Well, I did send you one email, but Now I'm back full time at this. Just hope you, good, you're recovered, good. Okay, so can everyone convert? You can all see it. Catherine, everyone can see my screen, but I'm just going to, just for you, I'm going to reproject it. Okay, so I'm just reprojecting the screen right now. I'm just going to load the S&P 500. Okay, good. So you should all be able to see yesterday's chart of the S&P. Can everyone see that now? Okay, good. Jerry, yes, I do use end of day for stocks with TradeStation. That's what we're using for the Wyckoff Williams fund. I'll show you how we do it in a minute. Yeah, so I'm using intraday timeframes. I'm using TradeStation. You can also use Sierra Chart, by the way. I've got a lot of customers using Sierra Chart. And then I'm using for my scan, which I do every week, which I'm about to show you. This is the scan that I did. I do this every Saturday usually is when I do it. And then I pick out my charts and then put them into TradeStation. Very simple process. And then use option strategies, looking for shorts after end of a rising market. So today we're going to focus on shorts. So I'm going to load the index, which I've done. I'm going to click on next. Check the date's correct. Yes, it is. So I've got data up until yesterday. Okay, I'm going to add all the stocks in the S&P 500. I'm going to be looking in the charts for 2 wave counts, right, or reference points. So in an up move, you see you've had a down move, an up move, a shallow down move, an up move. Now in a downward market, if the market begins to fall, which we know it has, I'm going to be looking for a decent move down and looking for shorts on the options. Yeah, okay. Let's just see if Danny's restarted his GoToWebinar very quickly there. There we go, Danny. You can just jump in and do a sound check while I'm doing this scan here. The reference points are 2, which I leave as standard. I don't change that. We may as well honour Danny here and call it Danny Eunis scan. See if his mic works. Danny, you there?
Yes.
Yeah.
Yes.
Okay. He's back with us. All right. So while we're doing, you probably need to put your mic up a little bit. You're a bit faint. Just talking about what I'm doing here. Okay. So having read the book 2 or 3 times now, having looked at some of the strategies, I mean, it is very easy to make money in falling markets, in my opinion. In fact, bear markets for me make me more money than bull markets quicker. I mean, because with bear markets, everyone panics and sells, and it's a great opportunity. And options is a wonderful way to do that. Just wanted to quickly talk about the book and some of the strategies that you've adopted through the Wyckoff method, just for about 30 seconds while this scan's going.
Gav, can you hear me?
Yeah, no problem.
Yeah. Okay. Cool. Yeah. So in the book, I'll talk about a trading strategy that you can use to monetize your share portfolio. Okay, by selling call options. But there's also another strategy that you use to protect your share portfolio. But you can also buy this on its own as well, and it's known as a put option. And what Gav showed beforehand, the end of a rising market in the S&P 500. Well, what you could have done was purchase a put option for the SPY ETF, and taken advantage of the down move in the S&P. So that's one way that you can short the market, is by buying put options. But you can also buy put options to cover or to protect your share portfolio, just in case if there's a down move in the stock that you've got. Yeah, so that's the way to do it. So that's what I cover in my book. But my book is primarily how to generate a income on your share portfolio, and not many people do that. It's a great way to, to create a 3 to 9% return on a monthly basis on your share portfolio. Okay, and that's covered in detail in my book there.
Yeah, good question from Stephen comes in here. He says, so large volume and up moves is bearish, which it is most often. Is there occasion where it's good for the markets? Yes, it's called absorption volume. It's rare, but what it looks like is, Stephen, you get very high volume breaking out through an old top. The most important thing to analyze is where the price closes. If it closes near the top of the bar, right, not in the middle, that's not good. That's telling you the effort is in the volume. The result is to close in the middle. That's not good. But if you get a price bar that closes through an old top, closes up near the top of the bar, the volume's very high, what you've got to look for it to be good for the market, and it's happened several times last year, is you look for testing of that top. And what a test is a low volume down bar. As the market falls, there's very low volume as it falls into that body of that bar where the high volume is. And if it refuses to fall on that low volume, it's going to go up again. So it's an exception to the rule. Most of the time, especially if the spread of the price bar is narrow on high volume, like you saw in the S&P, you saw it for yourself, that is serious weakness. That's why we've had the big corrective move, right? It's not massive, but it's a corrective move. And if you were shorting some of the stocks that came up in the scanner, you'd be in the money already because, quite frankly, it moved very quickly. And again, the strategy for that is all covered. You don't have to be a genius to understand Danny's book. It's written in a very straightforward, easy to understand way. I will accept that my book is a little bit more advanced. So was Tom's. What Danny did is take it to not just the principles, but how to make money with the principles. We teach the principles. We show live trading many times making money. Danny took it one stage further and said, look, these are proven strategies going back 40 years that you probably don't know about because they're not publicly taught. A lot of them, they're hidden. Don't know why. It's a bit like, why don't people teach Wyckoff and VSA more widely? Probably because it works and the professional money don't want people to make money. That's my opinion. What do you think, Dan?
Yeah, that's very, very true. Like, a lot of people, like when I say to them, you can actually monetize your share portfolio, they go, how? Never heard of such a thing. And a lot of people when they buy stocks, they just buy and hold and hope that it's going to go up. And in my book, I cover the stock BHP and how it fell from above 40 down to below 20. And if you knew about the strategy that I teach in my book, you could have recouped a lot of that down move by selling options over your shares. And yeah, so it's one thing that a lot of people don't know about. And I just want to get the word out there, make people aware of it.
Yeah, no, exactly. I'd agree with you. Pavel says, tricky question I like tricky questions. If you want to run a large hedge fund, isn't it like this that VSA will be useless for you because you will be on the other side? You will be the one doing up thrusts or shakeouts. Pavel, the thing about this, I've been asked this many times, is that do you know how much money is exchanged hands in the financial markets every single day, let alone every single week? All right, it's trillions of dollars. Now, I will not be managing trillions of dollars. Is it true that on occasion certain banks and big players can temporarily move the markets in their direction? They do. Then that's why we have market manipulation. But they don't control the market all the time. And most certainly, you'll find that even with a very sizable fund and being able, Jim Cramer talked about it perfectly in his video of 2005. Where occasionally he was able to affect price in Apple and maybe RIM, but he wasn't able to control the market, and no one's going to control the market. It doesn't matter how much money I've got. It doesn't matter how good I am with VSA. I won't be controlling a market. What I will do, however, is if all the banks, like let's say 3 large banks, decide to attack gold and they mark it up and get everyone to buy gold like they did in 2011, I'll spot it on the chart and I'll participate with them in the short. Absolutely. That's my job, to make money. That's what your job is. It should be. If you're sitting in this seminar listening, wherever you are in the world, your job, if you want to be a trader, is to make money. It's not that you're not there to entertain yourself pressing a button and losing money. That's not what this is about. Every one of you in this room should be thinking professional. You should be thinking smart, S-M-A-R-T, smart. That's what you need to become, a smart trader. Right, Danny?
Yes, yes, absolutely. Yep.
You know, and this isn't a hobby. You're not listening to me for a hobby, I hope. I hope you're not in here thinking, trading's a little bit like round of golf, you know, just go and hit the ball, hope it goes over the pond. Oh, marvellous. You're playing with big traders. You're playing with serious money. You want to make it in the market, you can make it. You can make a very good living at it. You can actually do extremely well at it. But it's, you know, as Danny's written in his book, on every chapter are words of inspiration from some of the greatest people in the world. I mean, the late Steve Jobs is a great example. Danny's book, he talks about Steve Jobs and he talks about connecting the dots as you move forward. Listen, if you want to make it in the markets, you've got to believe in yourself. Now, the fact that you're spending your time, and there are literally hundreds and hundreds and hundreds and hundreds and loads of you here, I mean, I'm not even going to count anymore, because you believe that we've got something. You wouldn't waste your time otherwise. Secondly, you're not sure maybe which way to start. Most people I encounter, and I've been spending, because we've been so busy, time over the last few weeks talking to people on the phone, which I don't usually do because I'm too busy, but I've had no choice. And especially with the launch of our Smart Center Pro software, which we've now stopped selling. It's not available on the website for the moment. And the reason is very straightforward. We've realized that every trader we talk to falls into a different category. And that means that you'll talk to a trader who's trading a $500 account. They can't afford software. They're struggling to make money within the markets. And then very next call I made, I'm talking to a guy who's managing just over $500 million. And, you know, $10,000 is peanuts to that sort of guy. It's very difficult to put everyone in the same pot. And one of the difficulties we've had as a company is everything we do will work for every single person. Doesn't matter if you're trading a $1,000 account or a $100 million account, because the principles are the same. They're not going to change. But what's going to change for you is how you manage your risk, because someone who's trading $500 to $1,000 cannot be using a 45 pip stop in Forex. But I've got people who talk to me and say, no, that's what I use, and I keep getting blown out. Not surprised. But then I'm talking to a guy managing, you know, he said, well, I bought, you know, 5 million of Apple a few weeks ago, and it's now in here. I bought it based on the principle of X, Y, Z. Hey, and the guy's made a fortune. But, you know, he had a very big stop, so when the market went against him, he didn't get hit. But he could afford to do that. So everything is always there. Now, let me show you how we look for stocks that are acting stronger than weaker than the index. Now, we've got the weak stocks here. We've got the strong stocks here. We can see here, we've got this one up here. Well, this particular stock, that's Southwestern Energy, which actually was an interesting one. This is a stock that's clearly, right, this is Fossil Group, just picked out one particular one. The index has been going up. Look at what's been happening here. If I put the weekly chart up, I'll just convert it to weekly, which is where okay, that's the market just opened. Look at this for a weak stock, right? Now I'm going to switch off all the VSA principles, okay, that are not confirmed, and I'm only going to go for the ones in a downtrend, which we can do. And you can see here that in a downtrending market, we pay much more attention to the principles. This is a stock, weekly chart, no demand, the upthrust, collapse in price. We have a widespread down bar, I call that a gotcha bar. We go back up into that bar, no demand. Then we have another gotcha bar, so we're making lower lows on this stock despite the index rallying. And then we're making another low, so we're making lower lows, we're in a downtrend. So would you want to buy this stock? Absolutely not. Absolutely not. There's another one. I mean, Nordstrom, Macy's. I used to shop at Macy's, that's a shame. I mean, they're absolutely tanking. Look at this, only a week and a half ago. This is a daily chart look. Back here on the 17th of January, we had the upthrust. Just over here on the 20th of January, when we saw the end of a rising market a few days later, this stock collapsed. So you'd be looking at, even before the end of a rising market signal, you'd be looking at shorting. Now, if we then move okay, to the TradeStation platform. Okay, and we just say, right, for the moment, we'll just look at some weak stock. These are stocks that I've been following, by the way, not from that scan, but from a previous scan. And you're going to see this fossil, okay? And we can put up a different time frame if necessary. This at the moment is the 5-minute chart, okay? So it's a very small time frame. Let's put up a slightly different time frame. So let's put up the 60-minute chart. And you can see it very clearly, look. Now, if I then put up the scanners in the software, and we look at fossil, okay, so this is the scanner that we use. Now again, you can see we've got different time frames here. Ignore these small ones. We're really only looking at the big time frames for options trading. Let me ask you all a question. The monthly chart of FOSL, looking at that scanner, what is the trend of price of this instrument or this stock? Right, this is nothing to do with Smart Center Pro, John. This is not Smart Center Pro. This is our retail software that I'm showing you, because that's what I'm using for stocks. You'll see it for yourself. William says, can you use TradeGuider with Kinetic? As long as it can be converted to Metastock data, then you can, but you have to convert it to Metastock data, William. Okay, well, it's definitely down. Right, for the last 6 weeks, what do we notice about the trend of price in this stock with a sign of weakness 3 weeks before the down move? Very obvious. Okay, and we can see the 4-hour and the 60-minute are all aligning red. And that's why it's fallen for the last 3 days. Go and check it for yourself. Here's your principles. No demand, supply overcoming demand, daily chart. Supply overcoming demand, daily chart. What does supply overcoming demand mean? Very straightforward. Yeah? Okay, here's your downtrend. This is the daily chart. Here's your signal in TradeGuider. It's represented by a red box, right? So that came in 4 days ago, 3 days ago. Big volume. You can't really see the volume very clearly, but you can make it bigger if you want to. But you can see there's an increase in volume, narrowing of the spread, and it's gone down nearly $2. This indicator is trying to pick up subtle changes in the balance of supply and demand. Remember, weakness, when it appears, will appear on an up bar. There's an up bar, price bar, closing higher than the previous bar. Please note, this also was picked up in the scanner in our end of day software. All I've done is imported it here into TradeStation, and guess what happens? If I bring up the scanner manager, every time a principle appears, that was a 3-minute chart, not particularly relevant to me, but any time one of these principles appears and I've set it, it sends me an email to my personal email account to tell me in a downtrend a principle has appeared. That is available in our retail software. People don't realize it. You can actually get, I mean, Danny, you're running the Skype room where you're getting these email alerts, and people don't understand that it comes from here. It doesn't come from Smart Center Pro, right?
Correct. So you know, you can set up your VSA plugin to look for certain VSA principles, and it will email you whenever those principles appear on the chart.
Yeah,
it's quite simple.
Yeah, James, just to answer your question, why wouldn't you use the higher time frames when you're scanning the market? I do. I don't know what people are missing. I just happen to have shown you that in addition, for a bit of entertainment, and I do this really when we're doing the live trading room, I've got these 15.5 ones in the stock. But no, I don't use these. I'm just showing, I mean, I could delete them and not have them. I'm just showing you that in a live trading session, we would use these to scalp. But no, from a investment point of view, the monthly, the weekly, the daily, the 4-hour and the 60 are the 5 that you, and again, you can preset that in the software. So you can say, don't show me these small ones. All I want to see, and that's the good strategy if you're an investor, show me the 60, show me the 4 hour, the daily, weekly, monthly. If they're all red and you get a sign of weakness appear and you get a serious sign of weakness like supply overcoming demand, you go and get a put option on it. Now, what could be simple? Danny, what could be simpler than that? I don't know how else to teach this. I don't know how any simpler. I mean, you look for trend alignment, you look for weakness on up bars, you do the opposite of the crowd, and you then short the market. I don't know how else to explain this.
Well, folks, it's really that simple, right? What we look for is trend alignment. So if we're looking at swing type trading, we'll look at the monthly, weekly, daily, 4 hour, and the 1 hour to be in trend alignment. And once we get principles that that are signs of weakness, then we'll look to short the market. And the way to do that with options is by buying a put option if you want to short the market. So yeah, it's really that simple.
Yeah, interesting. Somebody just typed out that you've got signs of strength on the weekly charts, and you've got reversals. Of course you do. You're going to have those coming in, right? And I need to know. I mean, this sign of strength here that came in on high volume caused the market to go up to the top of the bar. Not incorrect. It's absolutely right. But it went up on no demand. That's why it fell. Remember, you will see signs of strength as the market's falling, because the market, if you didn't see a sign of strength, the market would be vertical. It would do this. Right? Have you ever seen a market? Oh, you can't show it, unfortunately, using this. Have you ever seen a market that just does that and it never zigzags like this? No, it doesn't do it unless you've got well, you've now got plunge protection teams that stop that anyway. So, of course, you're going to get green indicators coming in on the weekly charts. And, of course, the market's going to go up for 2 or 3 weeks. It doesn't just go vertical. Well, this did on that week. And these are important bars, because if the market goes back up into these areas where the high volume is and it goes up on very low volume and you get principles, this is a weekly chart, no demand, into this area of weakness here, it's going to continue to fall and we make lower low, lower low, lower low. Look at the trend. For the last 3 or 4 years, the S&P's been bullish, the Nasdaq's been bullish, the Dow's been bullish, this thing's collapsing. Short the blooming thing. Don't buy it. Short it. Don't worry about signs of strength. Right? Here is your principles. Okay? Any of these scanners, we can look and say, look, these are all weak stocks, right? Monthly, down. Weekly, down. Daily, no demand, gone down for 6 days. Here, 240, down. 60, down. Short it. Okay, here, same thing. Everything's starting to align negatively. All of these here, this one here, again, the monthly is great, but everything else is negative. And what's happening to the market? It's falling. That's the reason why. Yeah, look, exactly. Marco says, look at FXCM when the Swiss franc disaster happened. Exactly. Pavel says, if it goes up or down for a couple of days, aren't we too late for the party? No. Yes, you're not. Listen, that signal that we saw over here on this chart and over here on the weekly chart 6 weeks ago was there when it appeared. Would you miss the party? You might say, I'm going to wait for 6 weeks and see what happens. There'll be others. The market's been, look, I keep saying this to me, when you look at the stock markets around the world, there will be stocks in bull markets that are strong and continue to rally as the market goes up. Those are the ones you buy. But there will be stocks that just refuse to rally, even when the index goes up. Those are the ones that when the market becomes bearish, they'll collapse and make you a fortune. Are there some hours when there will be less volume anyway? And does the software know that to take that? Ken, it's a good question. Tom Williams, I said to Tom, look, you don't really get any volume overnight really in the S&P futures and that, and you know the stock market isn't even open on the Globex, so the volume's pretty irrelevant. And he looked at me, he said, you're a fool. So what are you talking about? He said, smart money never go to sleep on the job. Never think there's no such thing as no volume. It's there for a reason. If there's no volume, it's because they're not active for a specific reason. And it's the most true comment he's ever made, because I remember one day, the day before Thanksgiving, a few years ago, everyone said, well, there'll be no volume today. because no one will be trading the day before Thanksgiving. It turned out to be one of the biggest volume days for months. So, you know, no, you're not a fool, Ken. It's a great question. I was the fool at the time because I said, well, I just assumed. See, there is a saying, I won't say it because it's a swear word, but assumption is the mother of all you know what's. And it definitely is. Never assume anything. And if you make an assumption, you're probably wrong. Just remember this. Smart money drive the markets, hence the word trading in the shadow of the smart money. Right? Now, they do not miss money-making opportunities. If the market moves on low volume, there's a reason for it, and it's nothing to do with the time of day. Let me give you a classic example so you can prove this and write this down. A few weeks ago, there was a massive move in the British pound, right, and it collapsed through its support, but it happened in the Australian session. Do you remember that, Danny?
Yes, yes.
Widely reported as a flash crash. That wasn't a flash crash. That was done quite deliberately by several banks. So don't believe the nonsense that... Look, we've just had a big article here on the BBC News, and it's called The Increase in Fake News. Right? The first time the mainstream media, there's fake news. And I'm like, well, Tom Williams has been talking about fake news for 35 years. No one ever listened to him. And he said, I used to create fake news when I was in a syndicate. Finally, the BBC, I mean, I'll have to see if I can find the, let me just see if I can find the article. It is actually very funny because in my book, Trading in the Shadow of the Smart Money, I talk about fake news, right? I talk about the professional money creating what is nothing more than fake news. Now, when that happens, right, it creates a sense of opinion amongst people. And those people then often act upon that news, believing it to be completely true. And so there is a story. I'll see if I can find it. I don't know if it's still on the site, but it will just echo and prove what we're saying. Oh yeah, here we go. Yeah, this is the actual headline. Don't know why they got a picture of some famous guy on this underneath this headline. I've no idea why. And if you can see that, Danny.
Yeah, it's come through.
I mean, this is on the BBC, right? This is a major website, okay? So this is BBC News. It was yesterday's headline, all right? So the members of Parliament are finally waking up to the fact that there's fake news. Hello, there's been fake news for 35 years. Why are we only waking up to it in 2017? Could be thanks to this gentleman, Mr. Trump, who said the media out in America are against me because they're creating fake stories. The trouble with the financial markets is they've been doing this and they're experts at it for over 100 years. Right, Danny?
That's absolutely correct, yeah.
And if you as an individual don't believe that to be true, then you're going to lose money because you're going to believe everything. What I always say to people is I'm an ex-policeman, so when I look at something, I look at the evidence-based fact. My evidence to make money in the markets is not what Danny tells me, and it's not what even Tom told me, right? It's none of those things. It's the data in the chart that I can interpret is the truth, because you can't, they even try to tamper with the volume. But the wonderful thing about volume spread analysis, VSA, is it uses volume relative to previous bars. And so when you get news coming out that gold is a safe haven, many of you will remember that back in, if you look at gold, in fact, even gold and silver, you get these safe havens coming in. I'm just looking at the euro at the moment because that's been marked up. You get these safe havens, right? And all the analysts come out and say, well, this is a safe haven and everyone's safe and everyone's going to be protected when they buy gold. And, oh, good, gold's going to, it's 1,800 a troy ounce, but it's going to go to 5,000. You're going to make a fortune. And then you get all these emails. If you're subscribed to some of these stupid websites, they all jump on it. Hey, we've got this book on how to make millions in gold by buying it. And not one of them came out and said short gold. Not one of the analysts said it. The only person that I can find in 2011/12 that said gold is a short was me on YouTube, which has had thousands of views based on the principle, end of a rising market and a buying climax. And you can go and check that for yourself. So, in summary, we've talked about the E-mini S&P. We've talked about stocks. We've talked about understanding principles based on strength and weakness. This is the 60-minute chart of the S&P. And we can see over here, let's just get rid of those. Don't need that at the moment. We can see the weakness. There's your up thrust. And now we're coming down into this area here, which is very important, which if broken, could cause us to fall even further and quite rapidly. Advice moving forward for what is the next stage for you as an individual, and every one of you different. This is what we have put together. We are changing our website. You'll already notice some changes if you go there now. Go to the website, TradeGuider.com. We're making changes to the site to reflect that we deal with a lot of different types of individuals, meaning we deal with hedge funds. We do deal with some banks. We deal with some of the big exchanges around the world. But we also deal with thousands and thousands of retail traders from all over the world. And some of those retail traders are trading Forex. Some are trading stocks. Some are trading futures. Some are trading a combination of all of them. But there's one thing in common with every single one I speak to. They all want to make either more money or they want to stop losing money. The simple solution, I believe, for you is two things to do right now, which is going to cost you very little. Number one, get Danny's book. It's $49. It's very little. I'm not going to even talk to you about how you get our software, right? Because that's up to you to go and find it if you're interested. Get Danny's book. It explains a lot of information. And don't just get it and leave it on your laptop or leave it on your iPad. Print it, stick it by your bed or wherever you read, and read it. And read it 2 or 3 times because it's good. And that you will, if you've listened to me over the last 14 years, there's very few books that I do recommend. David Weiss's book, yes. Dr. Gary Dayton's book, yes. Richard Ney, Richard Wyckoff books, yes. Danny's done himself proud. The other thing you can then do is reach out directly to Danny and find out how he made it, because he's successful. You don't write a book without knowing knowledge, and he can put you on the right path. He can tell you exactly what you need based on your own requirements. Now, we will eventually be generating what we call a fact find. So if you want to find out how we can help you, don't ring us, right? Because we're too busy. We'll send you a sheet to fill out with questions. And those questions are specifically designed to help you. They're individual to you. Right, so you will be, if you're a trader, be totally honest with us. If you want us to help you make money, there's only one way it's going to happen. Give us what we need to know so we can put you in the right direction. And if you haven't got a lot of money, don't worry. There's ways you can be involved. $99 to join a trading room if you want to. You don't have to spend tens of thousands of dollars. Yes, our software for hedge funds is $25,000 and it's going to go up, and I make no apologies for that. Because that's a different market that we're aiming at because we're a fund company. But we are not, and I want to be very clear here, and Danny can reiterate this, we are not deserting the retail trader. In fact, this webinar that's not costing you any money to attend, right, is because we're showing you we are supporting the retail trader. Right, Danny? In fact, it's where our business was built.
Yeah, that's right. That's right, Gav. And, there's a lot of retail traders, excuse me, retail traders that don't make it in the markets, and they turn to us for guidance on how to trade these markets. So I did it. If I can do it, anyone can do it. I've been using the VSA principles 2.5, 3 years now, I think it's been, and it took me around about 2 or 3 months to actually master those principles. Okay, so it doesn't take too long because I am focused on the most important principles, okay, and then build it up from there. So so I didn't overwhelm myself. So that's the way to tackle it, really, when you're learning VSA.
Yeah, I've put your email in, Danny. Then don't phone you, but the best thing is to email you with a Skype name, yeah, and then you can reach out to people. And of course, Steve's in here as well, who runs our live trading room. That might be a place to put you for a week to go and see how someone trades live with real money. We run a live trading room every single day. That may be something that you want to look at as well. But again, before you do that, reach out to Danny, right? He's gonna be there for you. He works extremely hard. He doesn't get any sleep. I don't know how he even functions, but he's been through the whole process. He's been through the whole process. So if you want to know someone who's come in as a customer, gone through the book, the course, and he's done the whole thing and come out the other end as an expert, Danny, you know, you're and Steve Phillips, who runs the trading room, same thing, running a full-time trading room, trading live with real money. Can be done. Every one of you can do it. Just got to make the commitment. With that, I've overrun. Sorry, I can't look at gold and silver at the moment. I am positioned in those things, but I will be in Steve's live trading room tomorrow, so I'll see you in there, and we'll talk more about gold and silver. Some big opportunities coming there for certain. On behalf of TradeGuider and myself, Danny, Laura, and the team, and Steve, of course, and Grigory, the programmers, and AJ, we wish you good trading and constant profits. We're here to help you. So God bless. Take care. And I will put this on YouTube, and we hope we can be of assistance to you. Again, the next step, get Danny's book, have a read, and open your eyes. Your mind is like a parachute, best used when open. Thank you.